Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast. With Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Microsoft and Nvidia commit to invest up to $15 billion combined in AI startup Anthropic. This is Saudi Arabia's Crown Prince is set to discuss tech investments and AI innovation with President Trump today. And gaming giant Roblox takes steps to expand age verification across its platform. We'll discuss with the CEO. But first, we check in on these markets. Once again, under pressure. The Nasdaq off by 1.7%. But we have raised $1.8 trillion from this benchmark since the end of October, in large part because some of the key AI players have been on the downside. Bitcoin, though, recovers ever so slightly up percentage point. We're at 92,846. Move on to individual movers because it's all around some of our top stories today. Cloudflare, we want to check in, and we're down 3%. That's after it's been fixed, but we were struggling to get onto NJ Transit. You were struggling to get onto OpenAI's ChatGPT. You were struggling to get onto many a website because of Cloudflare more broadly. And that's as we saw an outage that now they say has been fixed. We're still off by 3%. Let's talk about, though, the top story that we just mentioned. Microsoft and Nvidia both committing to invest up to a combined $15 billion in Anthropic in a move that ties the AI developer closer to two of the biggest backers of its rival, OpenAI. Bloomberg's AI editor Seth Beegman joins us some more. It's a tough time to be announcing that you're going to be buying cloud from one company while they're going to be investing equity in another. Just more circular deals, it feels like.
This one feels very clearly following the OpenAI playbook that we've been seeing in recent weeks here. Yes, I think Anthropic is taking money from Microsoft and Nvidia. Anthropic then plans to commit spending to Microsoft's platform using Nvidia chips. Kind of textbook here, and I think we'll add to some of the anxiety there, but it is on a bit of a smaller scale. Also, our understanding at this point is that this financing is part of a larger investment round to be announced at some indeterminate time. So TBD how much Anthropic is actually planning to bring in here.
I mean, they only just closed a round that valued them at more than $180 billion.
This is the new normal. It's a bottomless need, and everyone is tapping everyone else. All the ships have to rise together or else they fail.
But what's interesting is Amazon had to make clear that they're still the number one provider of cloud and of training compute to Anthropic. Everyone seems to be in Anthropic now, but how are we seeing that rival the likes of OpenAI?
Yeah, I mean, again, this is not an either or model. It's a yes and. I think we've seen OpenAI turn to Anthropic's backers, namely Google and Amazon. So Anthropic is doing the same. Now, there's a lot of intrigue there about what that means about the Microsoft-OpenAI relationship. But again, at this moment, everyone is tapping everyone else until the music stops.
And the music has been sounding a little jerky of late. I mean, certainly in the public sector, people have been worrying about these circularity deals on the actual productivity gains that we might ever get with AI.
That's right. I do think Anthropic, though, has messaged clearly in the last week or so that while they're kind of playing the OpenAI playbook here, we're investing heavily in infrastructure, in chips, building out more. We're doing it on a smaller scale. Now, as I said the last time I was on, 15, 20, $50 billion, these are massive sums, but when you compare it to OpenAI's $1.4 trillion, a bit more measured.
Well, we've also got other breaking news today from LLM innovations and improvements, this time coming from Alphabet. Shares are under pressure, down 2.3%, but they rallied hard yesterday because we know Berkshire Hathaway is getting into Alphabet. But now we've got Gemini 3, and it seems to actually be really rather good.
That's right. So at the same time that Google has been helping Anthropic and OpenAI compete, they're also still trying to be the best model on the market. And so I think with Gemini 3, they're really touting their gains in coding and in mimicking the process of human reasoning. Obviously, those are key aspects for Anthropic and for OpenAI as well. Interestingly, the Gemini 3 model also offers a more premium tier. I think it's $250, something like that, a month, and you get to do even more intense reasoning where you can test different hypotheses, and we'll see. But they're all competing with the same kind of benchmark claims here to try to be the dominant force.
And, well, we have news of LLMs getting ever more sophisticated. We're able to code, we're able to vibe code, and your team has been so busy because vibe coding startup, Lovable, which is actually a European startup, seems to be expanding and maybe even getting a really high valuation too.
Yeah, I think it's really probably the most promising, or one of the two most promising coming coming out of Europe right now. A lot of the vibe coding leaders are from the US, including Cursor, and you can argue Anthropic and others. I think Lovable has seen pretty strong organic demand and pretty promising growth in recurring revenue, but this is a crowded market. And if Google's model changes the game overnight for coding capabilities, that might have disruptions further on down the line. It's very much to be seen.
$200 million annual recurring revenue, and according to sources, a $6 billion valuation. We can have the CEO in a little bit later. Seth, amazing wrap up of all things AI. Seth Fiegerman, of course, who helps edit across that team. Let's turn to Washington now. Guess what we're talking about? AI, but with the Saudi Arabian Crown Prince Mohammed bin Salman. He's at the White House today meeting President Trump. We know the talks about deepening US-Saudi ties, but really there is such a focus on tech, on investment, on innovation. Let's do it all with Bloomberg's Tyler Kendall joining us from the White House. A lot of it's going to be about chip access.
Right, exactly, Caroline, and good morning to you. No doubt access to critical chip technology is going to be at the top of the agenda today, as Saudi Arabia has faced U.S. restrictions since 2023, in part over the kingdom's ties to Beijing. Now, I will point out that when President Trump visited Saudi Arabia back in May, the two countries announced a slew of investment commitments related to AI, related to data centers that are going to come to rely on access to these advanced semiconductors. But 6 months has gone by, and we have yet to see the U.S. greenlight those export licenses. Now, people familiar tell us here at Bloomberg News that the two sides are still hashing out, one, the security conditions for these shipments, and two, the specific reciprocal investments that Riyadh is going to commit to making when it comes to making good on their pledge for $600 billion in U.S. investments over the next 4 years. Now, perhaps adding to the pressure here is that we know that recently the UAE saw some of its export licenses greenlit when it comes to projects run by U.S. companies there. But Caroline, this really does dovetail into the other key part of the conversations today, which has to do with defense. We are watching closely whether or not the two countries enter into a defense mutual cooperation pact, and also those F-35s that President Trump indicated that he will allow the sale of. Of course, this comes back to the chip conversation, because there are concerns here also about whether or not China could have access to this advanced technology in these fighter jets. Caroline, I'll end on this. It's absolutely packed here in Washington. We're expecting tech leaders from across the country to descend and world to descend here, all leading up to tomorrow's U.S.-Saudi-led investment summit at the Kennedy Center here in Washington.
And we await that arrival of MBS to the White House. Tyler Kendall, thank you very much indeed. Let's get the wider investor perspective here. I'm pleased to say Margie Patel is with us, Allspring Global Investments Senior Portfolio Manager, Head of Capital Allocation. And look, we are thinking about how global narrative around AI continues to develop. Have you got any worries that we've been seeing, at least in the pressure on the stock market of late?
No, I think this is a little garden variety correction, because we've had a few wobbles, bad news in the private credit market. I think that we'll have maybe 5% correction. I think the year will finish on a very, very strong note, because really the trend for artificial intelligence is so strong for data centers. In fact, when you look at the companies that have commented, basically they don't have enough capacity for all the demand, and they've been able to raise prices. So that doesn't sound to me like a peak of a market that's ready to collapse at all.
I'm just going to go out to some sound that we heard a little bit earlier in a summit that Bloomberg's been having over in Africa. They had the JP Morgan vice chairman joining, David Pinto. Just listen what he said about a correction.
It's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
Daniel Pinto there of JP Morgan, just speaking with our own editor over in Africa today, Margie, and I'm really interested as to, why you think this will just be, I think you called it a garden variety correction. What will be there to support it? Will it be Nvidia's numbers that get us back on track?
Well, I'm not sure anything Nvidia could say will be enough to assuage market concerns. But really, when you look at the big market corrections, the economic corrections, they've all been driven by, frankly, Federal Reserve activity, when they start to aggressively raise rates. So right here, it looks, you could say, well, the Fed is somewhere between neutral to slightly easing. And again, that is not the precondition. I think we've been through so many of these cycles, all driven by the Fed, that we think it's natural that we should have a big downward correction. And I don't think we will. I think we'll just have a continued period of slow growth for most of the economy. The tech sector is very strong because artificial intelligence is really a qualitative leap in the kind of technology that we've had over the last several decades. So we think it's just a small correction. In fact, if you look at Nvidia, the stock really for this quarter, the fourth quarter, is really just about flattish. And all they are, except for Google, is the only one that's up for the quarter. So that says to me there's a lot of nervousness waiting for Nvidia. But I think after that clears the air, I think we'll have a strong finish because the fundamentals are still so strong as far as the eye can see, which I would say is at least for another year or so.
And look, we're looking at year-to-date, Nvidia up 35%, but it has eroded about $500 billion of market cap since the end of October, Margie. So is that a buying opportunity?
Well, I think it's a moderate opportunity, yes, because at least you have some of a discount. The PE is around 40 times, and that's higher than the average stock, which is around 27 times. But on the other hand, they're leaders in their sector. They should have an above-average growth as far as the eye can see. So it's really not as high priced as it was relatively a few months ago. So I'd say, yes, it's a good time to add to Nvidia because their fundamental position is really strong. I think it's just, as I said, market nervousness. Short-term traders have gotten badly whipsawed back and forth in the last couple of months, and I think that's what's really causing this downward wave in volatility.
Giving us the longer-term perspective, we always so appreciate it. Margie Patel of Allspring Global Investments. Stay well. See you soon, we hope. Meanwhile, coming up, gaming giant Roblox takes steps to expand age verification across its platform. We'll discuss the details of Roblox CEO Dave Baszucki. That's next. This is Bloomberg Tech. Roblox, well, it's begun rolling out age verification technology for all users and is introducing age-based chat as the gaming platform expands safety features with further parental resources too. Roblox CEO Dave Baszucki joins us now. And Dave, this really builds on that big, ambitious September announcement. How is this going to be rolling out?
Hey, great to be here, and what an enormous responsibility with 150 million users every day coming to the platform. We're rolling out what we believe will be the gold standard for the future of internet safety. We're the first really major gaming platform to use AI to estimate the age of everyone on the platform who wants to use chat and communicate. We're going to start rolling this out in December, and then should be all rolled out by January. Basically, on whatever device you're on, take a quick image, we'll analyze your age with AI, complement it with a bunch of other signals, and use that really to figure out who might you be chatting with to keep the platform more safe. We're not going to be allowing minors, for example, to communicate with people who are adults, and we're going to roll it out to everyone on the platform.
I'm really interested as to how you're going to measure success here, Dave, because in many ways you're trying to prove a negative. But how are you going to be internally thinking this has worked, people are satisfied, and they're safe?
Well, I want to highlight things are already working in that we're a very unique platform in that we filter all of the text and communication on our platform. We don't allow the sharing of images. We have monitoring for critical harms. We work very closely with law enforcement. So I see this as an addition to everything we're doing and really to our vision of what we've been calling the gold standard. But we do estimate over the next few months, we'll know roughly the age of everyone on the platform, and we'll complement that with some of the other things we do, like trusted connections and things like that, to constantly build on our innovation. You know, we've shipped over 100 safety innovations in the last year, so it's really a continuation of that focus.
You're using a third-party vendor, Persona, I believe, and how are you going to be ensuring that that's robust enough? The AI, the underlying technology is robust enough. Over in the UK, well, some that are using Discord, for example, have managed to bypass previous facial recognition age verification tests.
There's a bunch of other signals we have in addition to the facial age estimation, and we do have the ability to estimate several times if we need to. So in addition to using the camera to do an age age check. We have other ways to validate. And putting all of these signals together, we believe is pretty robust, really.
What's so interesting is clearly you're here with safety as a priority. You did mention back in the earnings, and your CFO in particular, that maybe you'll see some friction, maybe the numbers, the revenue, the growth might be impacted as people start to have to verify their age and maybe slower to come and adopt. Do you think that will bear out? How will it look longer term?
We shared this vision that we believe over 10% of the global gaming market, which is somewhere between a $180 and $200 billion market, is going to be running on Roblox. And in the earnings call we just had, we shared this amazing growth, both on bookings and DAUs in the 70% year-on-year rate. Long term, we believe this is just the right thing for the platform. We're unique in that we have all ages. We have people under 13, over 13. Our over 13 is growing rapidly. This is the right long-term vision, and we're really optimistic about continuing our growth.
Okay, so this is the right balance from your perspective. What do you think the data will bear out as to the ultimately the actual ages of people you have using it? Do you think you'll have more under 13s than you anticipated? Do you think you have more older users?
We can't estimate that exactly. What I can say is that the facial age estimation tech we're going to use is pretty reasonable and pretty accurate. I've tried it. Some of my kids have tried it. We've tried it within our staff meeting. So I think we're going to find out we're reasonably close, but over time we will get a better signal on everyone's age.
And this must be something that marketeers, that those that eventually will be buying more ads with Roblox are going to be looking at. Is this going to help inject some fuel to that offering because people will still feel safer about what age group are going to be consuming such adverts?
We have shared a couple things. We don't target under 18 already on the platform, but there's an enormous number of older users joining the platform. We shared in our earnings call, I believe in Q4, we're literally, or in Q3, running at over 10 billion hours a month of engagement. That's an amazing amount of engagement. Our economy is primarily driven right now by our virtual economy powered by Robux, but advertising is a wonderful complement. And you're right, we're going to have a better, more accurate estimate of everyone's age, which for a lot of our advertisers that are starting to hop on with events supporting all kinds of things, beauty products, movies, things like that, they'll have a better idea of really the number of people over 18 on our platform.
Roblox CEO Dave Baszucki on the latest safety updates. We really appreciate you joining the show today. Thank you. Now coming up, we're going to be speaking with the Lovable CEO, Anton Isika, as the company is said to be nearing a $6 billion valuation. This is Bloomberg Tech. AI coding startup Lovable is set to hit a $6 billion valuation. That's according to sources. The company is seeing rapid growth, reaching $200 million in annual recurring revenue and expanding with new offices in Boston and San Francisco. Joining us now to discuss, Anton Isika, CEO of Lovable. Anton, I go to the numbers that you've actually given to us, the $200 million the annual revenue run rate. That's a lot. Who's purchasing?
So we're seeing Lovable, since we launched just 12 months ago, been powered by this consumer and prosumer movement of individuals that use the product and then they love it. So they put in their credit card and that's just the movement that's been then translated to us being pulled into the enterprise where Fortune 500 companies like Klarna, HCA Healthcare, they're transforming how they work on top of just a completely new way to build software products and even software companies on top of the products that are being built.
$200 million in terms of what you're seeing annual revenue run rate. You're seeing, as you say, a breadth of enterprise adoption and individual entrepreneurialism. But when it comes to vibe coding and the use cases, where are you having to build out? You're building offices in America, it would seem.
Yeah, that's correct. What we're seeing is that Lovable is providing a lot of value in large companies moving faster, and many of those companies are in the US. So we have great leadership that has built companies at the larger stage before. Ryan Meadows scaled Klaviyo. He's now joining, building out from where he's based in Boston. We have Marianne Coy, who joined from Notion. She's moving with her family to Stockholm. I think that says a lot. While we keep the core headquarters here in Stockholm as we expand globally on the mission, which is simply to reimagine how software is built and who gets to build it. And we're witnessing a once-in-a-generation democratization of software creation. The
pace is extraordinary. It was only 4 months ago. It was only back in July that you mentioned that you've got a $100 million annual revenue run rate. Now that's doubled. You are, we understand, looking for funding. You could have a $6 billion valuation. Can you comment on how much you are needing to have yet further capital to finance this expansion?
Yeah, Caroline, I'm not here to talk about any fundraising that hasn't happened, but what I can say is that the momentum is absolutely astounding, and it's increasing. There are 100,000 new projects built on Lovable every single day, and what's growing even faster is how much traffic the meaningful applications and businesses built on Lovable are gathering. We're seeing 5 million visits to Lovable websites per day. That doubled in just the last 2 months. And some part of that is us building out and just reimagining how does the entire life cycle of building a software product look like. We launched Lovable's cloud and AI offering 2 months ago, and that has resulted in almost 30% of all the applications built having AI included, even though they're built without a software engineer. They're built by the 99% who don't code, and then starting to collaborate with engineers if they're being built in large companies in the same platform.
What are your costs? Where are you having to spend more? Is it talent? Is it compute? What is it that you are having to build within your business model?
So when someone asks Lovable to build a new piece of software or just a presentation, a demonstration of something that they think the business should be doing, we are, of course, consuming compute to power the AI. And that costs a significant amount. But Lovable has healthy unit economics. And now what we're looking to do is to just do everything we can to drive as much value for all of our customers. And that's going to require us to invest in the new offices that we're opening and to take care and teach customers that are using Lovable how to get the most value out of the product.
Anton, when you hear the anxiety in the public markets that companies are over-investing, that we're not seeing the AI rewards yet in the time frame that we need to for the amount of money that's going on capital expenditure, what do you say to that?
So when AI initiatives are being pushed into a company top down, then I think there is often a risk that the expectation is wrong. Someone hasn't used the tools themselves. What we're seeing with Lovable is that it's all being adopted bottoms up. So people come to the Lovable website, they build an application, publish it online or privately to their own company, and then they see value, and then they start paying. So I think there's a lot of different things happening in AI, and if you're considering making buying decisions, you should yourself use the technology and understand yourself how it can affect your business outcomes or your personal life. And at Lovable, we're seeing companies like Microsoft, Klarna, a large part of Fortune 100 companies adopting this new demo, don't memo, where anyone in the company builds software to take the company forward.
Demo, don't memo. Wonderful to see it being born. Out of Sweden, expanding here in the United States, Lovable CEO Anton Baszucki, we thank you so much for your time today. Now, another key story we're all digesting is Microsoft and Nvidia announcing investment combined $15 billion into Anthropic. In return, Anthropic will be committing to purchase $30 billion of computing capacity from Microsoft's Azure cloud service. Mandeep Singh and Bloomberg Intelligence breaking down what is, again, a circular deal here, but it seems as though this could really be rivaling OpenAI.
Well, so the way I look at it is everyone is looking to diversify. So in the case of Nvidia, they want a long tail of cloud players for their chips. In the case of Microsoft, they want to go beyond OpenAI and diversify into different LLMs. And because there are so few frontier LLM providers, I mean, Anthropic is the obvious choice. You can't really invest in Google or Meta's LLM. So from that perspective, it makes sense that they are looking for diversification. But look, in the end, when you look at the deployment of these LLMs, there is no doubt that Gemini just released their Gemini 3 LLM. So the progress is there. It's just for Microsoft, because they don't have their own LLM, it makes sense that they are investing in Anthropic and really making sure they have someone beyond OpenAI to look up to, because that contract expires in 2032. So they're really playing the long game here.
And then playing the long game for compute demand as well. How important is that $30 billion to the overall business model?
I mean, Microsoft has a backlog of $400 billion with a 2-year duration. So they already have a ton of visibility. This $30 billion is sort of an increment to that. And that's where, they have really differentiated from the other hyperscale cloud providers with their backlog, with their shorter duration, and with the visibility in revenue they have from, just the GPU and AI workloads compared to all other cloud providers. So from that perspective, this kind of helps their revenue visibility, at least for the next 2 to 3 years.
Mandeep Singh, Bloomberg Intelligence, thank you so much. Look, amid all the talk of this AI investment, venture investors, they are focused on 2 key things: picking the right startups that have intertwined AI and helping portfolio companies make the most of the technology. Hilary Gosher is with us. She's managing director at Insight Partners, where she oversees these considerations. The VC PE firm, it's got $90 billion regulatory assets under management. Hilary, I'm so pleased that you're here to talk us through what you are in charge in many ways of how AI is being adopted by your portfolio companies. You're all in on software in particular over at Insight. How are companies making the most of it and really showing productivity gains?
Well, Caroline, thank you for having me on the show. So Insight is an investor that invests across stage. We invest from early stage, startups, scale-ups, grown-ups once they go IPO. And over the history of Insight, we've had 55 IPOs, companies that you would be aware of: Shopify, Monday, and this year Hinge Health. And so we're very focused on making sure that we help build the best companies. And so this year we're celebrating 25 years of Insight OnSite, which is the team that works alongside portfolio companies, helping them scale and grow. Because the one thing that CEOs ask, which is, what do you provide me that's more than just capital?
Yeah.
And the point is, we provide expertise, we provide access, we provide talent so that they can really achieve their dreams, just like, Anton at Lovable.
I love Insight OnSite. That's actually 25 years that you've been bringing this to bear. And what is it that you learn at the moment that leaders are needing of you? Where is the guidance making most impact?
Yeah, so we have an accelerator program because, as you mentioned, everything is changing with AI, and we need our portfolio companies to keep up with the pace of change. Mm-hmm. There is a difference between those companies that are AI native and those companies that are cloud native, Anton being, AI native, and how do we help our companies who are cloud native pivot and make that shift towards adopting AI? And really, we think about it as our AI accelerator, and it starts with the CEO. So the CEO is the person that really needs to understand and adopt and drive the change and the transformation. So we bring CEOs into our AI accelerator program. It's a 6-month program, small cohorts of CEOs, and we help them think about 2 areas that they need to drive change in. The first is around AI in the product. So how are they building AI into their products that delight and deliver more value for customers? And then how are they adopting AI in their business so that they grow and scale more efficiently?
When you're looking at, I think you've got more than 130 dedicated professionals getting on site, getting really bedded in with these businesses and helping them accelerate. When they're thinking of just the top-down approach, it becomes a talent question. How are you finding that being an area of bringing everyone on board, everyone wanting to adopt, everyone wanting to ensure that these pilots are being proven out to work?
Yes. So there is a strong groundswell among employees to want to learn these tools. There is a fear as well on the other side that if they don't learn the tools, would they be disintermediated? Would they not have jobs? Instead, what we're seeing is that AI is really augmenting people and making them more efficient and better able to do some of their jobs. I'll give you a great example. So one of our portfolio companies works in the airline industry. They sell security and training software to large airlines. There are more than 7,000 incidents that are tracked a day, types of incidents that are tracked a day, whether an airplane is on the ground, in the air, on takeoff, on landing, taxiing, and these are connected across thousands of airports every day. There is analysts who collect that information. It's an LLM problem in the making.
Yes.
I mean, there's nothing better than a very large language model to be able to analyze all of this information and to really help those analysts provide the critical insights that keep aircraft in the air, keep passengers safe, and basically keep revenue flowing. So those analysts actually now feel like heroes, whereas before they were spending hours, but also behind the times, 3 weeks, 4 weeks before sometimes they got the data and were able to produce the insights. So in some ways, AI is really augmenting and helping them upskill and making them the heroes of the situation.
And that's really about organic growth there. Yeah. I think of the expertise that you have lent over your career when it comes to inorganic as well, and some of the acquisitions that have been made of your portfolio companies into bigger companies. But how much are you seeing that AI is a talent acquisition story, and that portfolio companies are looking out to buy others at this moment? Is that something that you're helping guide through?
Yes, I think it's interesting that you say that. Private equity has always been thought of as the domain for M&A, buy and build a platform company, but we think of it as also a domain for venture capital. And the on-site team has created an expertise to help our companies make those acquisitions for, exactly as you say, either geographic expansion or potential new products to put in, and for acqui-hires. And that is one of the ways that our companies are able to access some of this AI talent, because these new AI natives are starting AI first thinking companies, and some of those companies are ripe for acquisition by some of our companies who are looking for that talent.
It's fascinating to have 30 years of insight and 25 years that you've been building this team of on-site expertise. It's wonderful to have you here on the show. I hope you do come back soon. Hilary, of course, is over at Insight Partners. Hilary Gosher, Managing Director there. Now, coming up, robots. They're doing more for law enforcement, but as police departments invest more in these machines, ethical questions are arising. That's next. This is Bloomberg Tech. Time now for Talking Tech, and first up, Intuit will spend more than $100 million on a multi-year deal with OpenAI, aiming to make its apps like TurboTax and QuickBooks more valuable with generative AI. For the ChatGPT maker, well, the deal is part of a push to get consumers and businesses to rely more on its AI tools. Plus, Baidu, well, it's posted its worst sales fall on record. The Chinese search giant has seen ad and marketing spend move to rival social apps. Meanwhile, it's struggled to keep up in crowded AI race. Meanwhile, Xiaomi, which sold its first car just last year, is turning a profit from electric vehicle sales. The company's EV division posted a profit of approximately $98 million in the September quarter. Xiaomi plans to boost its EV production as it looks to compete with Tesla and BYD. Now, you may know this particular mechanical dog, we'll show you in a minute, for its viral dance routines. But Boston Dynamics' four-legged robot, Spot, is also playing an increasing role in law enforcement. According to previously unreported news, more than 60 bomb squads and SWAT teams across the US and Canada are now using Spot. Our consumer tech reporter Samantha Kelly joins us now for more. And Sam, how is this being adopted, and what situations are we seeing them really take these on?
Yeah, this is really fascinating. So we've seen some headlines over the years of Spot showing up maybe at a crime scene, but now we're getting new data from Boston Dynamics that shows more law enforcement units across the US and Canada are bringing these robotic dogs into their forces to help out in hostage situations or chemical materials that are sensitive, like going in to see if something is hazardous, basically to prevent law enforcement from entering somewhere. This dog can go in, it can climb stairs, it can open doors. It basically acts as a separate set of eyes. There's a live camera feed. So an operator standing quite far away from a scene can go in, assess the situation, and more law enforcement units, like I said, over 60 now in the US, but also we're seeing it overseas. Police in Italy are also using it, the Dutch ministry, and it still remains quite popular and manufacturing and other facilities as well.
They aren't cheap, starting at $100,000, so the reward needs to be large. But what about some of the ethical implications here, Sam, briefly?
Yeah, so it starts at $100,000 to your point, but it can go way up from that. We're seeing $250,000 in some situations, but yes, ethical implications here. Calling for more regulation around this from the state and even federal level down the line. Boston Dynamics has some rules in place, but perhaps some community guidelines are needed as well. Also, a lot of law enforcement units can't afford these different devices, so there's some, talking around that as well. So just really people trying to get used to seeing, something like this at a crime scene or at a situation, making sure that the public feels comfortable as well.
Bloomberg's Sam Kelly. Fascinating on all things spot. Well, the price of spot is now quite well above the price of Bitcoin, it seems. Crypto sell-off has just been taking a pause, but look, we're still at 93,420, let's call it. It actually tumbled below $90,000 overnight for the first time since April. Bloomberg's crypto reporter, Miao Shen, joins us now. And it feels as though we've got a little line of stability, but do we know who's going to be a buyer in this market? Is it institutional or is it retail?
I think for now, what we're seeing is that there's definitely some buyers have stepped in, like as of today, because we saw sort of, as you said, a little bit of stability in the market at the moment. But what we're struggling to figure out actually who's going to be the new buyers, right? I think right now we have a lot of these like DATs, or the digital treasury companies, similar to Michael Saylor's strategy, that perhaps going to coming out later this year or Q1 next year. I think they're expected to be the buyers of the market in the near future.
What's so interesting as well is during the government shutdown, we know that the list of ETF applications has been piling up over at the SEC. Many people want to have more ETFs that are related to crypto, but not always about Bitcoin. We know Bitcoin's taken a hit, but the altcoins have really been selling fast and furiously. Is that something just that the market's okay with? It stomachs that volatility?
I think it is quite concerning in terms of what's going on in the altcoins, right? Because I think they're still struggling to find support after the October market crash in crypto, because some of the altcoins in the market crash went down to zero on some of the exchanges. Like, can you imagine as a retail investor just holding a token all of a sudden went down to zero during this like brief market crash, especially if you're holding leveraged positions, right? I think people ultimately need to figure out what are the fundamentals of these altcoins? Like, are the projects behind it like generating any sort of revenue, or they're just sort of created out of thin air, or sort of like being meant as a joke, right? I think that's the questions people have to sort of like find out.
Fundamentals. It's a key question across all of this market. Miao Shen, it's great to have you on. Thank you very much indeed. Meanwhile, coming up, more to come on what to expect from that highly anticipated meeting. It's kicked off between President Trump and MBS. Of course, Mohammed bin Salman, the Crown Prince of Saudi Arabia. This is Bloomberg Tech. Let's return to Washington now, because Saudi Arabia's Crown Prince Mohammed bin Salman is at the White House today meeting with President Trump. The talks are expected to center on deepening US-Saudi ties and, of course, the focus on tech, on investment, on innovation. Bloomberg's Tyler Kendall rejoins us. You're live outside the White House, and there was much fanfare, a flyover, and a very warm welcome for the leader of Saudi Arabia. Why is this relationship so important from a tech perspective?
Yeah, hey, Caroline. Well, this is the Saudi Crown Prince's first visit to the U.S. in 7 years. So as you're alluding to, there's a lot of pomp and circumstance here today, as the White House has really viewed Saudi Arabia as a strategic partner when it comes to investments in the U.S., but also broadening out cooperation when it comes to tech and artificial intelligence. We know at the top of the agenda today, Saudi Arabia is looking for the U.S. to greenlight those export licenses related to advanced semiconductors. But we have reporting here at Bloomberg News, people familiar saying that right now those talks are centered around, one, what sort of security conditions will be put in place, and two, what are those specific reciprocal investments Riyadh is willing to make in the U.S. I have to say, I was at the FII conference back in February. That was a Saudi-backed investment conference in Miami, and it was President Trump's real first domestic trip since taking office, and he made the pitch that he wanted more money to be coming in from Saudi Arabia. A few months later in May, we saw him visit the region and secure a pledge for $600 billion in investments in the U.S. over the next 4 years. We know a lot of this the administration wants to see in these critical sectors that they have identified as being really important, particularly when it comes to our competition in China, such as data centers and AI. So we're watching really closely whether or not there are any specific investments announcements related to that. That, of course, goes hand in hand with the second bucket we're watching here, which is defense. Today, as President Trump has indicated that he's set to approve the sale of F-35 fighter jets amid some concerns, one, again, with those chips, access that China could have considering the close ties between the kingdom and Beijing, but then also what that means for Israel. We know that, of course, Caroline, that they have a monopoly over the advanced fighter jet technology in the region.
Bloomberg's Tyler Kendall, live from the White House. We so appreciate it. Busy day there. Busy day across tech. That does it for this edition of Bloomberg Technology. But do not forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. And keep an eye on some of those big tech names as we anticipate Nvidia's numbers after the bell tomorrow. From New York, this is Bloomberg Tech.